Why is it that 97% of futures traders are losing money with only 3% that actually succeed? What is it that the top 3% are doing, and how can you use it to make $1,000 in the next 30 days? If you've been feeling stuck in your trading, putting in the work and wondering why you haven't been seeing results, you see other traders traveling the world, driving fancy cars and retiring their families, and you wonder, what do they know that I don't? In this video, I'm going to show you the 5 key principles that'll make you $1,000 in the next 30 days. My name is Kyrien and I made thousands of dollars day trading in the markets, racking up hundreds of thousands of dollars in funding, and I even taught my best friend and little brother how to trade too, and they've both made over $1,000 trading. And by the end of this video, you know the exact steps to take over the next 30 days. But before we get into those, we first need to know what causes 97% of traders to fail. There are 4 major reasons. The first one is lack of a clear trading strategy, and for obvious reasons, this is really important. Many traders enter the markets without a well-defined plan, which can lead to impulsive decisions and inconsistent results. If you were a world-class athlete and your team was about to compete in the national championships, you wouldn't just show up to the game unprepared. Chances are you and your team would spend whatever time you have coming up with a plan on how to win. For trading, your plan needs to be simple and repeatable, and you have to follow it to a T. The second is most common with new traders: inexperience and overconfidence. New traders often underestimate the challenges of trading and overestimate their abilities. This is known as the Dunning and Kruger effect. The name coined by psychologists David Dunning and Justin Kruger when they were conducting research in the 90s that revealed individuals with little understanding in a particular area often overestimate their knowledge and abilities. The last 2 are what I found to be the reason most traders fail. The first being emotional decision making. Meet fear and greed. These 2 will ruin your trading. Robert Kiyosaki stated in his book Rich Dad Poor Dad that fear and greed can lead you into life's biggest traps if you're not aware of them controlling your thinking. So you need to be able to control your emotions. Great, but how do you actually do that? By doing exactly what the top 3% of traders are doing. Lastly is ignoring risk management. Many traders don't properly manage their risk, and there are 2 main reasons this happens. The first is greed, which we talked about before, but the second is they simply just don't know. I want you to evaluate yourself. Do you fall into one of these categories, or maybe even a couple of them? If you do find yourself in one of these categories, don't feel bad. Even the top 3% have gone through it. It's normal.
From now on, I'm normal.
But you can't remain in these categories if you truly want to become a profitable trader. So, what is it that the top 3% of traders are doing? Each stage is going to be crucial into helping you become profitable. Notice as we get to the bottom of the pyramid, the spaces are getting bigger. That's because as we go down, each stage becomes increasingly more important. At the top of our pyramid, we have our trading strategy. This is going to be our edge in the markets. I made a full video on the exact trading strategy and how to use it, but we're going to run through the framework of it real quick. So this is my For the Culture Effects trading strategy. You want to trade New York from 9:30 to 12:30 Eastern Standard Time. This is going to give us our most consistent volume, and the pair that we want to focus on is going to be gold. Now, you want to check MyFX book for any news events for the sesh. This helps you to spot any type of volatility that could potentially be had. You want to identify the 4-hour direction. Now, what I mean by this is you want to go to your 4-hour time frame and see which way is the volume pushing. Is price pushing down or is price pushing up with volume? And volume is very, very important because we want to trade in the direction of our volume. Now, step 3 is all about choosing what type of trade you're going to be taking: a continuation trade or a correction trade. A continuation trade is a continuation of a trend, which means that we'll be looking for price to run in the direction of whatever our trend is. A correction based trade would be a trade that goes against the trend, generally lower volume, and for each of these we have separate rules on how we want to execute. Then we dial down to our 15-minute, our 5-minute, and 1-minute time frame and identify our key zones. This would be any potential market shifts or any key supply and demand zones that price could potentially flip off of. Now, we want to wait for price to retest this key zone. Once price tests in this key zone, we want to wait for our signal candle. Our signal candle will either be a bearish candle or bullish candle after a 5-minute candle close, whichever direction we're going to trade. And like I said, I made a full video breaking down this exact strategy and how to implement it in the markets with live testing. And finally, you want to set your stop loss safely above or below your confirmation candle for rule number 7. Step 8 is set your stop loss to break even at 1-to-1 risk to reward or at a key low. If price just created a new low or a new high, you want to go ahead and take the risk off the trade. Now, this next portion is going to be the most important part of this strategy. Risk management. Risk no more than 0.5 to 1% of the account balance per trade and no more than 2 trades in a single session. This is going to keep your discipline super strong. By having this strict risk management plan, it'll help you to only take the best of the best setups. If you want to see a full video of the breakdown of this strategy, the link is in the description. With that, you've now solved 3 of the 4 problems mentioned earlier because you have a clear trading strategy with proper risk management that will limit your emotional decision making. And the second stage of the pyramid is not only the key to overcoming inexperience, but will also strengthen your emotional discipline. Practice. A wise man once said,
the more you fuck around, the more you're going to find out.
And he isn't wrong. A strategy and plan is only as good as the executioner. So you want to get as many reps in as possible. And you can do it literally from your phone by downloading TradingView and using their bar by bar replay. Set aside at least 1 hour a day for practicing. And you may be saying, well, I don't have that kind of time. This can be broken up into 4 spans of just 15 minutes a day. The average American spends 4 to 5 hours a day on their phone. So before you start doom scrolling, maybe spend some time perfecting your craft first. And remember, this video is for those who seriously want to change their lives with trading. Multimillionaire Jim Rohn says, if you want to learn to be wealthy and happy, learn to work harder on yourself than you do on your job or school. You have to show up for yourself because trust me, it pays more. For the first 15 days, you want to focus solely on backtesting while also practicing the strategy during the live markets, which now brings us to the third stage in the pyramid. While you're backtesting and forward testing, you also want to journal your trades. So many traders overlook the tremendous, and I mean tremendous difference you can make in your trading when you start to seriously journal your trades. There are journaling softwares out there that you can pay for, but I found a way that may be more effective and it's completely free. I created my own trading journal in a Google spreadsheet that allows me to track my trades in a simple way, and this is how I use it. Okay, so this is my trading journal here, and this is a fresh 50K combine that I started to prove that the strategies and tactics that I'm teaching in this video actually work and they will produce the result that you're looking for. So how I journal my trades is I'll simply put in a date here, whatever date it is, enter in the pair that I'm trading, which is, you can see, has been gold. This will be my risk size. So whether I'm taking partials, half, or full, partials is 0.25% for me, half is 0.5%, and full is 1%. So let's say we took a full continuation or a reversal or correction is what that is for me. Generally a continuation trade, as you can see, all continuation trades here. 5-minute time frame is generally where I take my entry during the New York session, and you can update here whether you hit stop loss, break even, or take profit. And as you hit it over here, you can see it updates our win rate over here. You can also see our count of our pairs. If you traded any other pairs, it will record it here as well. And then the profit and loss on each individual day. And then you can simply enter in, let's say we made $700 on the trade. We can put in our risk to reward here. And then generally I'll put a picture of my trade. So like, let's say Friday, we took this trade here. So Friday, we took this trade here. We took actually 3 trades, one that hit stop loss. This one actually pushed without me. And then this one was the final trade that we were able to capitalize on. So these are different things that I'm able to note in terms of, you know, what I'm executing on, and I can actually put in a note here for what happened during my trade, what I felt, how was the trade, what was the results of the trade. All of these are here, so you get a tremendous amount of value. I'm telling you, you get so much value from seriously journaling your trades, because you start to see what things that you're doing right and what things that you're doing wrong, and hone in on those things that you're doing right that have been producing the result that you want to see. So up around $2,400 on this account, $2,300 around that area. Now, you can make this template yourself, or you can click the link down below to make a copy. Okay, I have a confession to make. I told you that there were 5 things you needed to know to make $1,000 in the next 30 days. And you really just need these 3. You can make $1,000 in 30 days by using the first 3 stages in this video by simply back testing and forward testing for the first 2 weeks. In the second 2 weeks, you want to get yourself a 50K funding account. You can be able to pass this account in roughly 5 to 6 trades, and then that'll put you to the funded stage where you can make $1,000 in just a couple trades. Literally. That's great if you want to just make $1,000, but the next 2 stages in this pyramid won't make you $1,000. It will make you millions. See, you may have thought that becoming a successful trader is all about the trading strategy, but becoming a successful trader is more about your personal development, your own self-growth. If you want the kind of money that can change your life, then you need to know the final 2 stages of the pyramid. Stage 4 is continuing to increase your knowledge. If you want to become a successful trader, study successful traders. If you want wealth, study wealthy people. In the book Think and Grow Rich by Napoleon Hill, he studied over 500 millionaires, one of them being Henry Ford. You know, the guy whose car company is now worth over $40 billion. Yeah, well, that book went on to sell millions of copies. Why? Because for the first time, people could study truly wealthy people. This was way back before you could just look things up on your phone. You had to know somebody who knew somebody to get any kind of information. And to have the study of over 500 millionaires in the palm of your hand was unheard of. But today we have the internet, which makes learning much more accessible. So we need to remain in the flow of constantly learning, because there are only 2 things separating you from the life you desire: the things you don't know and stage number 5 in the pyramid. So the 3 books that I'm going to start you off with are The Power of Discipline, The Richest Man in Babylon, and the Bible. These books will help you build the right habits, become rich, and ultimately guide you in your life. And to show you just how much the things you don't know are costing you, I got this example from Alex Hormozy. So whatever you make a year, write that on top. So let's say you make $50,000 a year. All right, we're going to put $50,000. Under that, you want to write $1 million, and you want to subtract it. That'll give you $950,000. So what he said is you pay life $950,000 every single year for not knowing how to make $1 million. The last thing on the pyramid is by far the most important, and without it, none of the other steps will work. Execution. You have to get to work. If you don't actively put this plan into action, your situation will not change. And in order to become a successful trader, you have to first do what successful traders do. And I'm just giving you the blueprint. Now, it's up to you.